Ladies and gentlemen, something massive may be unfolding for XRP right now. A new political narrative is emerging in the United States, and it could completely change the future of crypto regulation. Recent comments linked to Donald Trump are sparking speculation across the crypto community, with many investors wondering whether a major policy shift could finally bring clarity to digital assets. If that happens, projects connected to global payment infrastructure, especially those tied to Ripple Labs, could suddenly find themselves at the center of a massive financial transformation. The real question is, could this be the bullish catalyst XRP holders have been waiting for? Recent comments and policy discussions connected to Donald Trump have sparked a new wave of debate across the cryptocurrency industry. Political figures in the United States play a major role in shaping financial regulation, and whenever a high-profile leader speaks about digital assets, it can quickly influence market sentiment and investor expectations. Trump's recent statements and the broader political conversation around financial innovation have drawn attention to how the next phase of U.S. policy could affect the future of cryptocurrencies. In recent years, the United States has been at the center of global discussions about how digital assets should be regulated. Lawmakers, regulators, and industry leaders are debating how to balance innovation with financial oversight. Because of this, any indication that political leadership might support clearer or more favorable rules for crypto can immediately spark optimism among investors and blockchain companies. Supporters of digital assets argue that clear regulatory frameworks could allow the industry to grow more rapidly while attracting institutional investment. For projects such as XRP, political developments are particularly important because regulatory clarity can influence how financial institutions interact with blockchain-based technologies. Companies like Ripple Labs have long advocated for clearer crypto regulations in the United States so that banks and payment providers can confidently explore blockchain solutions for cross-border payments. As a result, whenever influential political figures discuss crypto policy, the market tends to react quickly. Traders, analysts, and institutions begin analyzing how potential policy shifts could impact innovation, adoption, and the long-term growth of the digital asset ecosystem. While political statements alone do not determine the future of crypto markets, they often play a powerful role in shaping the narrative around regulation, technology development, and investor confidence. The possibility of a shift in government policy is becoming an important topic in the cryptocurrency industry. If a future U.S. administration decides to adopt more crypto-friendly regulations, it could significantly change the landscape for digital assets and blockchain companies. For years, many projects and investors have faced uncertainty because regulatory rules around cryptocurrencies in the United States have often been unclear or inconsistent. This lack of clarity has made some financial institutions hesitant to fully engage with digital assets. If policymakers introduce clearer frameworks for how cryptocurrencies should be classified, traded, and used within the financial system, it could provide a much more stable environment for innovation. Digital assets such as XRP could benefit from this clarity because companies and institutions would better understand the legal guidelines for using blockchain-based payment technologies. Clear regulations can also help exchanges, banks, and payment providers operate with greater confidence, knowing they are following established legal standards. Another important factor is the role of companies like Ripple Labs, which focuses on developing solutions for faster cross-border payments using blockchain technology. Regulatory clarity could make it easier for financial institutions to explore and potentially adopt these types of systems without worrying about uncertain legal consequences. When the rules of the market are clearly defined, innovation often accelerates because businesses can invest in technology with greater certainty. For the broader crypto market, a shift towards supportive or clearly defined regulation could attract more institutional investors and encourage long-term development within the digital asset ecosystem. While policy changes alone cannot guarantee adoption or price growth, They can create the foundation that allows new financial technologies to develop and integrate more smoothly with the traditional financial system. Clear and well-defined regulations can play a crucial role in encouraging banks and major financial institutions to explore and adopt blockchain-based payment systems. One of the biggest barriers preventing large institutions from fully engaging with cryptocurrencies and blockchain technology has been regulatory uncertainty. Banks operate under strict financial laws and compliance requirements, so before adopting any new technology, they need to clearly understand the legal framework that governs it. When governments and regulators establish transparent rules for digital assets, it provides institutions with the confidence that they can integrate blockchain solutions without facing unexpected legal or compliance risks. This clarity can open the door for banks to experiment with faster and more efficient payment technologies, particularly in areas such as international money transfers and cross-border settlements. Traditional cross-border payment systems often involve multiple intermediaries and can take several days to complete, which creates delays and higher costs for businesses and consumers. Blockchain networks, on the other hand, have the potential to settle transactions within seconds or minutes while reducing the number of intermediaries involved. Because of this efficiency, some financial institutions have shown interest in technologies connected to XRP and the XRP ledger, which are designed to support fast and low-cost value transfers. Companies like Ripple Labs have been working with financial institutions to develop solutions that can improve global payment infrastructure. If regulations become clearer and more supportive, banks may feel more comfortable testing or integrating blockchain-based systems into their operations. Over time, this could lead to greater institutional participation in the digital asset ecosystem, potentially accelerating the development of new financial technologies and modernizing the way money moves across the global financial network. The ecosystem surrounding Ripple Labs has been gradually expanding as the company continues to focus on improving global cross-border payment infrastructure. Traditional international payment systems often rely on multiple intermediary banks and outdated settlement processes, which can make transactions slow, expensive, and inefficient. Ripple has been working to address these challenges by developing blockchain-based technologies designed to move money across borders faster and at lower cost. At the center of this ecosystem is the XRP ledger, a blockchain designed to support quick and efficient value transfers. Transactions on this network can settle within seconds, which is significantly faster than many traditional banking systems that may take several days to process international payments. Because of this speed and efficiency, Ripple's technology has attracted interest from banks, payment providers, and financial institutions that are exploring ways to modernize global money transfers. The digital asset XRP is often discussed as part of this ecosystem because it can potentially function as a bridge asset between different currencies. In theory, this could allow institutions to convert one currency into XRP and then quickly convert it into another currency on the receiving side, helping to reduce the need for large pre-funded accounts in multiple countries. If more financial institutions experiment with or adopt such systems, it could influence the level of activity on the XRP ledger. While the long-term scale of adoption remains uncertain, the continued development of Ripple's payment solutions and partnerships with financial institutions has kept the conversation around XRP active within the broader digital asset industry. As global commerce becomes increasingly digital and cross-border transactions continue to grow, technologies aimed at making international payments faster and more efficient are likely to remain an important area of innovation. Political developments can often have a powerful and immediate effect on sentiment within the cryptocurrency market. Because the digital asset industry is still evolving and heavily influenced by regulatory decisions, statements from government leaders, policymakers, or regulatory agencies can quickly change how investors perceive the future of certain cryptocurrencies. When positive or supportive political signals appear, market participants may become more optimistic about long-term adoption. On the other hand, negative regulatory news can trigger uncertainty and rapid sell-offs. For digital assets like XRP, political developments are particularly important because regulatory clarity has been a major topic of discussion in the industry. When policymakers debate how cryptocurrencies should be classified or regulated, investors closely watch these developments to understand how they might affect trading, institutional participation, and future technological growth. Even a single comment from a high-profile political figure can quickly influence market sentiment. This change in sentiment often leads to increased price volatility. When traders believe that new policies could support innovation or encourage institutional involvement, buying activity may rise rapidly. At the same time, if there is fear of stricter regulations or legal challenges, selling pressure can increase just as quickly. Because crypto markets operate 24/7 and are highly sensitive to news events, these sentiment shifts can lead to sudden price swings within very short periods. As a result, many analysts and investors pay close attention to political signals and policy discussions when evaluating the potential direction of the crypto market. Developments in government regulation, financial policy, and international cooperation can all shape investor confidence and influence how digital assets are perceived within the broader financial system. Political developments are particularly important because regulatory clarity has been a major topic of discussion in the industry. When policymakers debate how cryptocurrencies should be classified or regulated, investors closely watch these developments to understand how they might affect trading, institutional participation, and future technological growth. Even a single comment from a high-profile political figure can quickly influence market sentiment. This change in sentiment often leads to increased price volatility. When traders believe that new policies could support innovation or encourage institutional involvement, buying activity may rise rapidly. At the same time, if there is fear of stricter regulations or legal challenges, selling pressure can increase just as quickly. Because crypto markets operate 24/7 and are highly sensitive to news events, these sentiment shifts can lead to sudden price swings within very short periods. As a result, many analysts and investors pay close attention to political signals and policy discussions when evaluating the potential direction of the crypto market. Developments in government regulation, financial policy, and international cooperation can all shape investor confidence and influence how digital assets are perceived within the broader financial system.